Okay, so the US unemployment rate is at 4.1%, but is that really as good as it sounds? Are jobs in trouble right now? Some industries are feeling the pressure, and it's time to take a closer look at what's going on. Hey, welcome back to Tala Talks Money. I'm here to break down the latest in the world of finance, and today we're diving into the 4.1% unemployment rate. It sounds like good news, but are we missing something? Let's get into it and figure out what's really happening with jobs. Alright, so the US unemployment rate is at 4.1% on the surface. That sounds pretty good, right? Typically, anything under 5% means most people who want to work can find a job. But is that really the whole story? Well, not exactly. While the number itself is low, there's a lot more to it than just a percentage. For one, the unemployment rate doesn't capture everyone. It doesn't count people who've stopped looking for work or those who are working jobs they don't really want or are underemployed. So yes, the number looks good, but it doesn't tell us if people are actually in the right jobs or making enough money to live comfortably. Take manufacturing, for example. This sector has been losing jobs for years, especially in industries that depend heavily on trade. With the rising tariffs and trade wars, many companies are cutting jobs or turning to automation to stay competitive, and that's not necessarily reflected in the overall unemployment rate. It's the same for retail. Companies like JCPenney and Sears have been closing stores, and that's leading to job losses that don't always show up in the numbers we see in the news. So, even though it looks like most people are employed, some industries are actually struggling to keep workers. And it's not just about having a job, it's also about what kind of job you're getting. The gig economy has been booming, but that doesn't always mean job security. More and more people are turning to side hustles, part-time jobs, or even freelancing just to get by. It's great that people are working, but part-time work and gigs aren't always enough to provide the financial security people need. Plus, many gig workers don't get the benefits that full-time workers do, like healthcare or retirement plans, which makes their financial situation much more unstable. There's also the issue of wage stagnation. Even though a lot of people are employed, wages aren't growing at the same rate as the cost of living. So while more people have jobs than in the past, many of them still don't feel financially secure. People are working hard, but their paychecks aren't going as far as they used to, and that's a big issue. Now, let's think about who's really affected by these job struggles. While the 4.1% unemployment rate is relatively low, certain groups are facing a much harder time. For instance, low-wage workers are often the ones hit the hardest. As prices rise, they're finding it harder to stretch their paychecks to cover the basics. Then there are young people and minorities, who tend to have higher unemployment rates compared to the general population. While the overall number might look good, these groups are facing more barriers to finding stable work. Older workers who've been laid off also face huge challenges. It's hard for them to get back into the workforce, and when they do, it's often at a lower pay than they were making before. So while the unemployment rate looks decent, these groups are still struggling to find jobs that are both stable and well-paying. And that's something we should all consider when we talk about the state of the economy. Now, the big question is, what does this mean for the economy as a whole? Well, if more people are working part-time or in unstable jobs, it means they have less spending power, and that's a big deal. When people don't have secure, consistent paychecks, they're less likely to spend money on things like housing, cars, or even dining out, which could slow down the economy. Businesses that are cutting jobs or failing to hire aren't helping either. This could contribute to a slowdown in economic growth. So while the unemployment number might look good, the quality of jobs and the overall job security isn't as strong as it seems. So what does all this mean for you? If you're feeling uneasy about the economy, you're not alone. Job security is a bigger concern than the numbers let on. If you're worried about your job or the stability of your industry, here are a few things to consider. First, it's important to keep learning. The job market is always evolving, so picking up new skills is key, especially in growing industries like tech, healthcare, and renewable energy. Second, if you can, look for jobs in stable industries. These sectors are likely to continue growing even in times of economic uncertainty. And lastly, it's always a good idea to work on building up financial security. Having an emergency fund and reducing debt can help cushion the blow if something unexpected happens with your job. So while the 4.1% unemployment number sounds good, it's not the full picture. The job market is facing hidden challenges, and it's important to keep an eye on those. But don't worry, by staying informed and adjusting to the changing economy, you can still navigate these uncertain times. What do you think? Is the job market as strong as it seems, or do you think there's more to the story? Let me know in the comments, and if you found this video helpful, make sure to subscribe for more updates on the economy and personal finance. Thanks for watching, and I'll catch you in the next video.